You're listening to the Decisive Podcast, insights and analysis to empower confident decision making.
Welcome to the Decisive Podcast, brought to you by S&P Global Market Intelligence. My name is McCartin, the principal economist on the pricing and purchasing team, and I'm hosting the podcast today. We'll dive deep into the far-reaching implications of the modified country-specific tariffs imposed by the U.S. President Donald Trump on August 1st, from the vantage point of Asia, given its critical role in global trade. We'll look at what this means for the Association of Southeast Asian Nations, or ASEAN countries, who are heavily dependent on exports to the United States. We'll try to answer what this means for the global electronics value chains, which rely heavily on Asian manufacturing. And as we look into 2026, we'll try to answer how will shifting demand respond to this fundamentally altered international trade landscape. To help us unpack these developments, we have two distinguished guests from S&P Global Market Intelligence, also on the pricing and purchasing team with me. Ashima Tyagi, an economics associate director based in Singapore, and Hoong, the lead electronics economist as part of the pricing and purchasing team, and she is based in Kuala Lumpur. It's a real pleasure to have you all on the Decisive today, Ashima and Jan. Looking forward to our conversation, both of you. One note I want to make to our listeners is that we are recording this on August the 6th. By the time this airs, some things may have and likely will have shifted and changed. But we do expect to still have a high degree of freshness, should the changes not be too different than what we see currently. So get into it. On April 2nd, when the U.S. announced new country-specific tariff rates, ASEAN countries voiced deep concerns regarding the unilateral nature of these tariffs, especially considering that ASEAN as a bloc is the fifth largest trading partner of the United States. Although some countries in the region have seen their tariff rates reduced or maintained in the latest August 1st executive order, the current rates are notably higher than those in 2024. Ashima, could you elaborate on how ASEAN economies are approaching this new development?
Thanks, Tommy. I think before I answer your question, I'd like to take a step back and talk about some numbers to set the context. Firstly, the combined GDP of the 10 member states of ASEAN make it the third largest economy in Asia and the fifth largest in the world, as per 2023 figures from the World Economic Forum. And secondly, with a total population of around 670 million, ASEAN was the world's third most populous region in 2023. So, with that in mind, I also want to talk about, quote unquote, the ASEAN way, which has brought the region to where it is today. So, ASEAN way is actually a very distinctive diplomatic approach that has shaped the ASEAN region since its inception in 1967. So, it's basically rooted in the principles of consensus building, non interference, informality, and flexibility, as well as something called quiet diplomacy. And why it's important to mention this is because over the last several decades, these principles have enabled a diverse group of 10 Southeast Asian nations to cooperate, to resolve disputes, and really pursue regional integration, despite the fact that they have a lot of significant political, economic, and cultural differences. And you'll notice that these principles, again, are in sharp contrast with other regional groupings, say the EU or the NAFTA, where decision making can be more legalistic. It can be on the basis of a majority vote or, where enforcement can be very swift and binding. So again, I bring this up because the ASEAN way is naturally criticized for the same things it's appreciated for. These things like informality, flexibility, sometimes makes crisis response very slow and slightly ineffective. And this limitation also came to the fore during the current tariff crisis. So ASEAN's preference for consensus and non-confrontation definitely ensured unity, but really limited its collective bargaining power, which has, of course, resulted in, a patchwork of bilateral deals with the United States with varying concessions. Now, coming to your question on how ASEAN nations are really approaching these tariffs, they are definitely acting as a cohesive bloc because there is a belief that being stronger together is more important at this point. ASEAN countries do not view themselves as competitors in the context of receiving lower tariffs from the US. Instead, they really emphasize on regional solidarity because of the interconnectedness and, the cross-border production networks that they have. So the bloc now has really accelerated its efforts to really increase intra-ASEAN trade. They want to have seamless flows of goods and capital within the region. And something that I can bring up is the ASEAN Digital Economy Framework Agreement, or DEFA, which is actually the world's first region-wide digital economy agreement. It's expected to be concluded by the end of the year, but this is expected to, harmonize digital trade rules and really unlock ASEAN's digital economy. So what I'm trying to say is that, ASEAN is very integrated in its nature, and they don't see the current shock to their economies as something that really pits them against each other. It really still brings them closer together.
That adds good context to how ASEAN works, how it approaches trade relations. It brings up a contrast in my mind with how the European Union works, for example, where that bloc has negotiated as one with the US over at least a framework for a trade agreement. And then what you see afterwards is some of those members of the EU are still debating what they should prioritize after that agreement was inked. So with the new tariff regulations set to take effect on August 7th, 2025, impacting most goods except for those already in transit or entered before October 5th, and a few groups that get exceptions for other trade actions. Could you elaborate on the specific tariff levels that are being levied on ASEAN exports? And additionally, how do you foresee these changes affecting global supply chains, especially given ASEAN's pivotal role in exporting goods to the US?
Thanks, Tommy. I think that's a very important question. For the major ASEAN countries, a 19% tariff rate has been agreed to, while Vietnam and Brunei face moderately higher rate of 20% and 25% respectively. On the other hand, Singapore enjoys a more favorable base tariff of 10%, while Myanmar and Laos are subject to a steep 40% tariff. Of course, like all other countries and in ASEAN, there will be the Section 232 sectoral tariffs that we need to watch out for. There have been some that have been imposed. There are some that are still being investigated, including semiconductors and pharmaceuticals. And naturally, I think in terms of the industries that will be affected in ASEAN, it would be the textiles and clothing industry, electrical machinery, electronics, mechanical appliances, and automotive products as well. But again, the biggest risk for ASEAN will be the tariffs on semiconductors and other electronics if they are no longer exempted, something that perhaps Jan could elaborate on. But from within ASEAN, Vietnam and Cambodia are the economies most reliant on the US market. For example, 30.7% of Cambodia's exports actually are bound for the US, mostly footwear and garments, but then it just shows how important the US market is for Cambodia. Again, another important thing to highlight right now is, that there's going to be strict anti-transshipment measures in place, and goods that will be evading, the rules that are set in place will incur a 40% duty. So this is particularly a sticky point in the case of Vietnam because the Chinese inputs are very significant in Vietnam's supply chains, accounting for almost 18% of its total exports, the highest ratio in the region according to S&P Global Market Intelligence data. And currently, there is still very little clarity on, how do you define transshipment. Particularly for Vietnamese exports, it will be critical to understand how much percentage of value Vietnam must add before goods can be classified as made in Vietnam. But as I mentioned earlier, ASEAN countries now will need to really accelerate measures to expand intra-ASEAN trade as well as integrate with partners outside of the US. Now, increasing intra-ASEAN trade will not be easy because 98% of the tariffs within this region are already at 0 to 5%, which is why, the intra-block trading has been relatively modest, say 22% of the group's total trade. However, efforts are being made. In May this year, I think the group concluded negotiations to upgrade the ASEAN Trade and Goods Agreement, ATIGA, which is called. And these changes are now likely to be adopted at the next ASEAN summit in October. For trade outside of ASEAN, of course, the region has always been a big proponent of free trade. It's party to 7 free trade agreements with key partners, such as mainland China, Korea, Japan, India, Australia, and New Zealand collectively. It's already a part of the Regional Comprehensive Economic Partnership, the world's largest FTA, comprising like 30% of global GDP and a third of the world's population. So ASEAN has always been very open and outward looking, and it's currently exploring, having wider economic links with the GCC and more so with mainland China. So I think the countries will continue to accelerate efforts to find more avenues to trade their goods with, even though it's very tricky to do so with United States at the moment.
Thanks, Ashima. Very helpful. Now that we're talking about the specifics around ASEAN trade, the electronic supply chain is what comes to mind immediately. Jan, this is surely a prime example of the recent decades of globalization, with different regions specializing in various stages from raw material sourcing and component manufacturing to assembly and distribution. Could you walk us through how this global supply chain is structured for electronics, and specifically which regions dominate each stage? What are the key factors that determine which different parts of the process take place where?
Thanks, Tommy. Sure. So the electronic supply chain overall is deeply interconnected across different regions at the global level. For example, we have the US leading the way in designing chips, but to actually build these chips, we need machinery, equipment, and tools that mostly come from other countries such as Netherlands and Singapore. And when it comes to the specialty chemicals and materials, Japan and Europe, they provide many of these materials necessary for building the chips. And if we move to the wafer fabrication stage, there is actually a clear split between legacy and advanced nodes. So for legacy chips, which is the kind of components that is used in our daily basis, such as car or home appliances such as washing machines, they are mainly made in mainland China. But if we are talking about the cutting edge nodes, such as the AI chips or advanced processors, these are mainly manufactured in Taiwan and South Korea. So the chips overall after that need to be packaged, tested, and assembled. That's where the ASEAN region really takes over and comes into the picture. So the ASEAN countries such as Malaysia and Singapore, they have become the global hubs for this high volume, cost efficient packaging, testing, and processing for the semiconductor. And just to put all of this together into a picture, for example, a single chip might be designed in California, and we might use the equipment from Netherlands, be fabricated in Taiwan, and finally packaged in Malaysia. And this is just showing that there's no single region can handle the entire electronic supply chain on its own. And beyond the chip itself, if we start looking into the final products, such as the phone that we are using on a daily basis, or the work laptop that we have been using, or even the industrial equipment, assembling for these products frequently happens in the Asia region, such as China, Vietnam, and India. But for sectors such as aerospace or defense, the components might be made in Asia, but they are frequently exported back to the US or Europe and integrated into the final system.
Great. Thank you for that, Jan. And staying with you, I'd like to understand that given the complexity of the electronic supply chain that you just described, could you break down what tariffs are currently imposed on the electronics by the US and how these are affecting the sector?
Thanks, Tommy. So let me break down the current tariff landscape and what does that mean for the electronic sector. So with the recent updates on the reciprocal tariff, not every electronics products are currently subject to this reciprocal tariff. For example, we do have some product categories currently covered under the Annex 2, so they will not be subject to this reciprocal tariff. And the examples on the list under the Annex 2 would be computers and computers accessories, smartphones, integrated circuits, semiconductors devices, and semiconductor manufacturing equipment as well. But that's only one layer on the country level tariff. At the sectoral level tariff, as mentioned by Ashima earlier, the semiconductor sector is also currently under the pressure from the Section 232 investigation. And our price and purchasing team assumed that by Q4 2025, these semiconductors in the US could be hit by the tariff as high as 25% under Section 232, which would likely push up the US prices for these components as early as Q4 this year.
Thanks, Jan, for that comprehensive overview of the electronics tariff space. I was also looking at ASEAN's Manufacturing Purchasing Managers Index, the PMI figures released by S&P Global Market Intelligence. The report suggests that July marked the first month in the last 3 months where purchasing activity was not declining, with firms indicating flat buying patterns. Ashima, how do you see the outlook for ASEAN economies?
Yeah, so of course, in the first quarter of this year, there was an initial surge in exports out of ASEAN, which really supported the growth, essentially front loading to the United States. However, April to June was a period where there was a reasonable amount of consternation regarding what would happen about these reciprocal tariffs, which is why I think manufacturing activity kind of slowed down a bit. However, now again in July, we are seeing, very small expansion. So essentially, our ASEAN manufacturing PMI has just fractionally surpassed the neutral mark of 50, which separates expansion from contraction. So it's essentially up 50.1 from 48.6 in June. So it's a very small increase. Of course, output growth has improved in July, and the downturn in new orders have eased, suggesting some sort of a recovery. But again, we'll have to watch the trend further. But the July PMI also showed that confidence for the year ahead output has slipped to a 5-year low. So I think that is a very important indicator to look at. Producers are definitely very cautious. They are projecting very subdued growth over the next 12 months compared to the historical average. And it has got to do with, the tariff situation that we're discussing right now.
Thanks, Ashima. And for context, we're talking about there has been contraction in manufacturing at several countries and regions. It's not huge declines, but it has been pretty slight declines. And we've seen something similar in the PMI for electronics, where for several months now, the output and the new orders indexes are running below 50, meaning they're indicating slight contractionary territory. Jan, with all the trade policy changes we've seen lately, what does the global semiconductor supply demand picture look like?
Thanks, Tommy. So, looking at the global semiconductor landscape in this year, supply has largely improved after experiencing the shortages happen during the COVID-19 period. And lead times have also normalized across different segments. And we also now see a more balanced inventory levels as well. But in the near term, demand trends remains to be mixed, and this is because of the ongoing tariffs and subdued macroeconomics outlook. And it is impacting the business investments as well as the consumer spending, which will lead to the sluggish demand on the semiconductors key end markets. And if we look at the different region, Europe, we are seeing a softer consumption due to the weak economics growth and a more cautious consumer spending. And on the other hand, at the Asia region, we see a little bit more of a demand strength, although it's still below the levels that we saw in the previous years. And within the electronic space, demand is actually shifting. We do see there is a lesser strength in the products such as smartphones and computers, but at the same time, we also see more demand momentum in AI, data centers, EVs, and potentially drones and robotics as well. And there is also a moderate growth for components used in aerospace as well as the defense sector. But at the same time, demand in industrial and automotive production is actually weakening, causing the weakness in the demand for the mature semiconductors. And overall, this divergence is actually creating a split market, as we do see a demand strength in the AI driven components, but we do see a demand softness in the legacy chip segment at the same time. But looking ahead, the medium to long term demand outlook remains to be solid, and this is going to be driven by the expansion in digital infrastructure, electrification, and also industrial automation.
Thanks, Jan. So moving on to the adaptation strategies in response to rising tariffs. I'm going to ask you, Ashima, what actionable strategies can firms in the region take, especially the procurement and supply chain teams?
Yeah, so companies outside of the US, including those in ASEAN, are really at a key inflection point, I would say, when it comes to trade and supply chains. The era of simply waiting and seeing has passed, and companies are realizing that they need to act quickly, I think, because hope is no longer a strategy. And tariffs will not be going away. They will remain a permanent fixture of US policy. So businesses have to rethink and adjust their operations quickly. What we've been talking to a lot of our clients is that they would have to build tariff resilient supply chains through, say, number one, maintaining their existing supplier relationships, and number two, the strategic application of tariff engineering. So on my point number one of maintaining supplier relationships, what we're seeing is that the relationships that have been nurtured over the years by these procurement teams are under unprecedented pressure, especially given the volatility. And in these coming years, maintaining these relationships will really be essential. What a lot of procurement teams are doing is that instead of doing simply some short term savings, they're trying to be very strategic. They're trying to think long term because, your existing supply can really support you through this volatility instead of suddenly getting new suppliers from different regions. So that can really build supply chain resilience. Whatever supplier diversification will happen only due to strategic reasons. The evolving nature of tariffs have really created an environment where attractiveness of supply chain diversification simply as a blanket model away from a geographic location has really reduced. On my second point of tariff engineering, what we mean by that is that, say, number one, you're innovative in your sourcing strategies to classify under lower tariff categories. Definitely don't mean tariff evasion. It's simply being mindful of, your products and where are you sourcing them from and what HS codes they classify into. Secondly, you can make conscious choices in your product design and manufacturing process. So again, this could take various different forms in terms of, say, regionalization of supply chains, or you understanding your exposure across tier one and tier two suppliers, staying very informed of US policy carve outs or exemptions, and so on and so forth. So, this kind of tariff engineering not only helps in offsetting tariff impacts, but it can really enhance one's supply chain agility. It can really help hedge against potential disruptions and maintain one's competitive edge. So, yes, I'd say, keep your current supplier close, keep the relationship strong. And number two, try to see where else you could do some sort of tariff engineering and try to, reduce the tariff exposure that you have.
Very helpful. Thanks, Ashima. So, Jan, based on what Ashima has just shared and what you have spoken about earlier in this conversation, what are the implications of these changes for pricing and supply chains in the electronics industry?
So the main key takeaway is that the electronic productions is shifting away from the lowest cost regions, which also means that there will be a higher price floor for many electronic components, especially nowadays some companies they are relocating operations from highly cost efficient hubs. And this diversification improves the geographic sourcing and also improve the supply chain resilience, but it also come at the expense of higher costs, especially for the non-legacy components. For example, the fabs established under the US CHIPS Act, they are expected to operate at a higher production cost compared to setting up the plants in Asia. However, despite this, it is still undeniable that the global investment in production capacity is still accelerating, which also means that you can easily source the electronic components from more different countries. And on the pricing front, soft global demand on the semiconductor as well as the ongoing tariff uncertainty, it's weighing on the macroeconomics outlook across different regions. For example, in Asia, we do see a lot of front loading happen that could provide some temporary demand support. However, it is still insufficient to lift up the semiconductor prices. And as a result, we do assume that the component prices in Asia are expected to stay flat or decline slightly into 2026. And meanwhile, at the same time, our team also assumed that there will be an upward pressure on the US prices, especially with the ongoing Section 232 semiconductor investigation. And one of the potential risk factor on the electronic supply chain is that there will be a potential higher price impact on the US electronic sector if the tariffs are extended to cover the full electronic supply chain from semiconductor until the end products. And especially US is heavily relying on imports from Asia for the end products such as computers and smartphones, where the US import penetration is around 70% on these products. So if there are broader tariffs are implemented, this could actually sharply raise up the prices for these end products and also significantly impact the cost structures across the US as well. And at the same time, however, these trade barriers could also open up the buying opportunities for alternative suppliers in other regions.
Great. Thank you, Jan. And so that was our final question. So I'll just offer a few summarized takeaways here. First one for me was that the ASEAN countries, being large exporters to the US, the US's higher import tariffs will no doubt be significant to these ASEAN economies. They're likely to respond by further improving trade relations with other countries. It could be the GCC, countries in Northeast Asia. The patchwork approach to the US setting new tariff rates on ASEAN countries at different levels also may create space for some creative workarounds to avoid the highest tariff levels. Then switching over to electronics, on the demand side, there are a few standout sectors, the more advanced, newly developing industries, but there's still this broad softness in autos and industrial manufacturing and infrastructure to some cases. That mainly means weakness for the demand for legacy chips. Then there are still big unknowns around US trade policy for electronics. We might get information later this week, could be later this year, on what the Section 232 investigation will mean for semiconductor tariffs. And then more broadly, will those tariffs be focused upstream? Will they include downstream final goods, the laptops, computers, smartphones, for example? And then we don't know yet what the tariff rate levels will be, although 25% is a starting point for our analysis. Then lastly, the electronic supply chain is deeply integrated globally. There is no quick way to move the entire supply chain to one country. And this approach to nearshore or reshore capacity will undoubtedly mean a higher price floor because it requires shifting some supply away from the lowest cost regions. And I think we can leave it there. Thank you so much, Ashima and Jan, for taking the time to share your insights with us. That wraps up this episode of the Decisive Podcast. Until next time.
Thank you for listening to the Decisive Podcast from S&P Global. Please subscribe and join us for next week's episode. Until then, stay curious and stay informed.